Let's take a look at some information charts on Ethereum for Brave New Coin. So much like I did for BTC earlier today, let's start with the block time for Ethereum, which is around 13, 14 seconds. Slowly been creeping up over the past few months. Now, Ethereum's big, major, huge issue has been fees since the beginning of the year. So miners are fat and happy, but users are certainly going elsewhere or acting on chain and grumbling about it because fees are high and staying high. And the hash rate also tells you that miners are fat and happy. They can't wait to add more hash rate here, even though they know eventually all of their hardware will no longer mine Ethereum because Ethereum is eventually going proof of stake. Miners are so fat and happy that the shovel sellers, the ASIC makers, are also continually adding more and more ASICs to the market, even though we get closer and closer to ETH 2.0. This is at 4 cents per kilowatt hour, the Ethereum algorithm, which can also mine ETC, but in the moment it's definitely not mining ETC, at least shouldn't be if you're acting rationally because the profitability is much better on Ethereum. Even with EIP 1559 and a net reduction of issuance at 65%, there was a full week that was deflationary. Inflation's around 1% to 2% now, so it's comparable with BTC. Even with all of that, the pumpamentals are perfect. I'll go down the list. You couldn't set the stage for better pumpamentals in that inflation is low, exchange supply is dwindling, more and more coins are being locked up in ETH 2.0. ETH TVL on chain is all-time highs in USD. Everything is perfect. If it were a purely speculative trading asset. For many people, the strength of Ethereum has been the ability to transact upon it. And if fees remain high, it gets harder and harder for most people to transact on Ethereum. So any sort of fee alleviation is better sooner rather than later. Transaction counts very near all-time highs up here at 1.25 million, 1.32 million. And average transaction values, you can see fees on the chart right here. Average transaction values continue to stay high because no one is going to be sending $100 transactions or claiming $100 airdrops or something when the fees are $100. You're not adding tiny amounts to a lending and borrowing protocol because you're losing money on that transaction. It just doesn't make sense. So the higher transaction fees, the higher transaction counts. And we can look at average transaction fees as well, which are just, this kind of says it all, right? Can ETH do well price-wise with fees being as high as they are? And you can say, yeah, this is notional. If we look at mean fee sizes in native units, which is ETH or GUI or whatever you want to call it, you can say, oh, this is fine, right? But people don't look at this. They look at it as they rightly should in USD. So it's between $500 and $1,000 for me to make a more complex DEX transaction, for example. I'm just not going to do it. It's just not happening. And here's another way to visualize miners being fat and happy. Miner revenue, even with EIP 1559, on a notional basis is still greater than almost it's ever been. It's almost at all-time highs aside from when fees were at runaway levels in May this year. So miners are rightfully adding more and more hash rate so long as the network will keep paying them. NVT and active addresses, on-chain active addresses, very close to all-time highs. I say very close, but it's getting close, right? All-time highs are around 789. Currently, we're around 630, 640. We're certainly higher than we were in the all-time high in 2018. NVT in the line here is an inverse measure of economic utility relative to price. So you want this declining. Currently, NVT is rising and has been rising since August, since July. It says there's less and less on-chain activity relative to market cap. This could be a fee issue. This could be what we're measuring. If you're not measuring DeFi in some way, shape, or form, this is going to look different. NVT is. Do you count NVT as on-chain, or do you count DeFi as on-chain activity for NVT? NVT wasn't tooled for Ethereum, so it's not a great metric for ETH anyway, but it's always worth looking at where NVT sits on all the coins anyway. If you look at MVRV relative to price, this is on-chain activity relative to market cap again. And historically, the highs in MVRV have corresponded with highs in price, either local highs or all-time highs. In May, MVRV was 2. That was the all-time high at that time. Currently, MVRV is 1.95, and we're basically sitting at all-time highs or very near all-time highs. So the question is, if we do keep rising here, what is MVRV going to look like? Or much like the NVT problem, is this just a measurement issue where we're not measuring or including the right data for the on-chain calculation? Again, MVRV wasn't really tooled for ETH, it was more tooled for BTC. But as you see more and more sort of off-chain, side-chain, DeFi-related activity, that's going to change how this looks over time. Here's ETH on exchanges, which is continuing to dwindle, has been dwindling the entire year. And again, this is exactly what you want to see. If you're bullish on anything, you want to see supply get soaked up. You want to see fewer and fewer people have the ability to sell anywhere. Now, the caveat here is that most of this is probably going into the DeFi ecosystem, going through DEXs, going through lending and borrowing, DYDX, leverage, right? All sorts of stuff is happening with this. It's not just sitting on chain anymore. It's getting yield somewhere most likely, which is why it's dwindling in exchange wallets. It's also being sent to ETH 2.0. I don't really see anybody talking about this anymore, but it's above 8 million ETH just gone, poof, out of circulation for the time being, 8.25 million, which also has a massive effect on price. Again, if people can't sell it, if it's locked up, if it's vested, if it's being held, right? If it's being forcibly held, you can't sell it, even if you wanted to. Now, there's some ways to deal with this E2.0 stuff with certain smart contracts, but for the most part, I'm just going to imagine that if it's squirreled away in ETH 2.0, it's effectively just out of circulation for the time being. So that is also extremely bullish for price. Here's TVL in USD terms for everything, all these DeFi dApps. And over the years, this has gotten less and less scammy. I trust all of these, or virtually all of these on this list. They'll have their moments like Cream, right? You have to know what to stay out of and where risk is as far as potentially having problems in places. But as far as this top 10, top 5, I've probably used all these personally. I've trusted them doing stuff on them. So that's a big shift from the gambling days that you'll see now on EOS and Tron, where there's less dApp activity and more just straight gambling. TVL in notional terms, all-time high. TVL in ETH terms, flat. Not a lot going on there. A lot of people like to tout TVL in USD terms. And yeah, it's at 200 billion-ish. But at the same time, you're just talking about ETH appreciation. You're not talking about an increase or a massive increase anyway in ETH being sent to DeFi contracts. Most of the TVL here, or at least a lot of it, is also stablecoin, but it is in the ETH ecosystem. If you look at Ethereum Google Trends past 5 years worldwide, we are currently just cruising at the 2017 all-time high in Google Trends. So there's still a ton of just baseline activity for people around Ethereum, price, media, Vitalik, content. All this stuff is getting picked up here on Google Trends, and there's still a lot of activity here. Even though price is kind of just flat doing nothing, we are seeing a continuous uptick week over week here in Google Trends. It's not to May levels, but that's a good thing. We don't want to see Google Trends up here at those all-time highs if price is doing nothing. We want to see volume come in. We want to see volume on Google Trends come in. We want to see this start to uptick. It's just super flat so far. Over the past month, just flat, but it is slowly moving up. But this will move up with price if price moves up. Moving on to technicals, this is the 12-hour 2-year MA multiplier. So it's effectively the 1-year MA in the green here, the multiplier 5x that in the red. And I'll use anything that looks good on backtesting. I don't care that this is some random MA on some random time frame. It makes sense because it gives you a range low, it gives you a range high, tells you where to buy, tells you where to sell. Historically, it's caught the tops and bottoms pretty well. Recently caught the top around 4,400, 4,200, whatever that top was at the time. Currently, the top is projected at around 12K, bottom around 2,500. It's in the middle of the range, below the midline. This isn't really too helpful in the moment, but it does give you potential highs and lows like an oscillator, where to buy, where to sell, that sort of thing. Looking at ETH on the cloud with the 200, with VPVR, volume, RSI, 200-day moving average. I put everything in one chart because it's fairly simple. This thing is a slow-moving freight train to this fib target of 5,500 to 6,200. Pick some high, some low here. You know, if you want to use candlesticks and wicks, that's up to you. If you want to be conservative, use the line chart. But it gives you a range up here between the 1618 fib and the measured move as far as where you'd expect price to be. So we're not there yet. We're above all the VPVR. There is a TKC clamp a little bit here, meaning that we are a bit overbought. That you can see this TK separation, the Tenkin and the Kijun here on the cloud. Support is around 3750. There's volume support at 3300, 3500. There's 200-day moving average support at 3200. So this thing isn't going to just fall through the floor if we flip bearish suddenly magically for no reason whatsoever. There is a continuous bear div up here, higher highs in price, equal highs in RSI. So we are getting a little tired, and ultimately there's just no volume. You know, nobody is excited to buy up here just yet. If we need to wash out a bunch of people for some buying excitement, so be it. But I like 3750 as a dip buy opportunity with the same target of 55 to 62. And just to show the alligator fractal on ETH, the 3 MAs here, the 5, 8, 13, still flip bullish. So that's your first litmus test. Are we bullish? Are we bearish? We're bullish. We're above the MAs. We're above the midline specifically as well. That's a good barometer for just a baseline stop loss. If these start to twist bearish before price moves, that's also a good stop loss signal. Something else you can use is the fractals, which print on a low, high, low, or a high, low, high, and you can get a feel for when you get these fractals. But currently, ever since October, you've had this trailing stop loss this entire time that's been correct. The entire time. I missed one here, but you get the point. This acts as a trailing stop loss. The trailing stop loss is currently somewhere around 4,200. So it's relatively close to price here. The midline's also relatively close to price. It's also relatively close to threatening across here on these MAs. So it's a very, very, very tight range, and it's getting tighter and tighter and tighter as price goes nowhere. So if you're long, leverage, not investment advice, but if I'm looking at this, stop loss is around 4,200 with a dip buy around 37. Anything below 37 is probably a gift, but I like 37 as a dip buying opportunity. ETH BTC, I think it's an untradeable mess historically, but on the weekly, this is slowly shaping up to look more and more bullish, so long as it can hold this diagonal and or rectangular consolidation. It's just ranging up here, cruising. This may end up forming an ascending triangle, and if it does, then that sort of solidifies the bullish bias to 0.1. That is very likely where we are going if this thing can hold the bullish consolidation. Otherwise, I like 0.05. That's the weekly Kijun on the cloud down there, which is why that yellow line is there. So is it a great setup here as we stand? Not really. I would trade this as a breakout trade, so anything above 0.77 would be a long on ETH-BTC with a target of 0.1. So this is also very much just a wait and see. And this could last until mid-2022. You know, we'll see what happens. But I wouldn't jump at the chance at trading this anytime soon. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio. I trade for TechMe Capital and Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance allocation, all the vaults I'm in here on Yearn, Comp, and Aave, as well as the trades in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.